Mike Novogratz just went live on CNBC, and you really need to hear his take on the current crypto market. It's heating up fast. Plus, we've got some key updates on the Genius Act. A vote is likely coming early next week, and I've got all the latest details to break down. Kevin O'Leary's also chimed in with some insights, and yes, we're diving into XRP as well. So much is happening in the space. Let's jump right in. Hope you're doing great. Wishing you an awesome weekend. Seriously, I appreciate every one of you. Let's get into it. Now, the market's been buzzing. We saw about 104,000 recently, and I clearly remember when the rebound started after those April lows. If you recall, gold was the first to make a move. You said it back then, when gold moves, crypto usually follows. And look at us now. It's happening again. That euphoric high around the time of the inauguration. Yeah, that was a mix of factors, some related to Trump, some market-driven. Crypto pulled back, retesting those levels from the election breakout, but now it's pushing upward again. If we break past 106, 107, maybe even 108, the next targets could be 130, maybe 150. And from there, we're in price discovery territory. Just think about it. Gold's a $22 trillion market. Crypto's hovering around $2 trillion. As younger generations begin to inherit wealth and look toward digital assets, we could eventually see crypto matching gold's value. It's not a short journey, but it's not out of reach. Now let's talk legislation. The Genius Act is picking up momentum. Congressman Hill is pushing it as a way to future-proof America's financial system. He says stablecoins can reinforce the US dollar's strength globally, improve our outdated payment infrastructure, and make sending money faster, more affordable, and more transparent for everyone. This technology, digital assets, is being called the future of finance, and the US, it's positioning itself to take the lead. Thanks to negotiations, especially from the Democratic side, new consumer protections have been added, which cleared the way for a vote. So now the Senate's about to weigh in on what could become the cornerstone legislation for crypto, laying out federal guidelines for stablecoins backed by US-based assets. The goal of this bill is to lay down the first solid regulatory framework in the US for payment-based stablecoins. It's all about putting rules in place to protect consumers, stop money laundering, and strengthen national security. One major part of the legislation is setting clear rules about who can and can't issue these stablecoins. Now here's what happened recently. The bill hit a roadblock last week. It didn't move forward because Democrats raised concerns mainly about the lack of strong anti-money laundering measures, national security safeguards, and consumer protections. Basically, they wanted these things written into the bill, but Republicans either left them out or didn't go far enough. So the Democrats stood their ground, and honestly, that's a good thing. These protections are crucial. They're meant to safeguard regular people like you, so rushing the bill through without them would have been a mistake. There's also been some noise around Trump's crypto holdings, adding fuel to the political fire. But putting that aside, let's talk about what's happening now. Senate Majority Leader John Thune has officially filed for cloture on the Genius Act. That means there's a procedural vote lined up for Monday, which is meant to cut off extended debate and push the bill toward a final vote. But here's the catch. It'll need at least 60 votes to move ahead, so that means they'll need around 12 Democrats to back it. Now that some of their demands have been addressed, there's hope they'll support it. Why does all this matter so much? Stablecoins could play a huge role in America's financial future, and even in national security. Think about the bond market for a second. The 10-year Treasury yield helps set the tone for almost every major loan, mortgages, student loans, credit cards, you name it. Right now that base rate is a little over 4.5%, but banks add their margin, so most people are paying around 6–7% interest on loans. Compare that to just a few years ago. Back in 2020, you could get loans at around 1%. It was unbelievably cheap. But now, with inflation and tightening financial conditions, borrowing money has become a lot more expensive. This is the kind of environment where stablecoins could bring innovation and efficiency if the rules are set up right. There's a lot of hope right now that interest rates will cool down in the coming months. But here's the thing, stablecoins are about to become a key part of this economic puzzle. Why? because countries like Japan, China, and even some of our allies are starting to offload US Treasury bonds. They're watching America's debt spiral upward and realizing we're not exactly making serious moves to rein it in. The government just keeps borrowing more and more, no matter which party is in charge. Over the past 2 decades, since the early 2000s, the US has added a staggering $36 trillion in debt. That covers everyone: Bush, Obama, Trump, Biden. Surprisingly, it was Clinton who actually managed to balance the budget. But after that, it's been full-speed spending ahead. Even under Trump's term, federal spending soared higher than it did during the same period under Biden. So the pattern is clear. We're living way beyond our means, and that's freaking out other countries. That's why they're offloading US debt, not just because of financial concerns but also as a way to gain leverage in trade talks. It's like saying, if you won't give us a fair trade deal, we'll hit where it hurts, your debt. And if the 10-year Treasury yield pushes above 5%, it could spell serious trouble. Because at the end of the day, America's biggest product isn't cars or tech, it's financial services. We tell the world, invest here, it's safe, it's stable, you'll earn a return. But if our markets start to unravel, investors will simply take their money somewhere else. That's exactly why stable coins are so important right now. When other nations dump their treasury holdings, stablecoin issuers can step in and buy them. These bonds then serve as the foundation behind many of these digital coins. In a way, stablecoins act like a Trojan horse. They carry the US dollar forward without forcing it on anyone. Instead of pushing the dollar through political pressure, crypto-native finance quietly spreads its influence by giving people around the world an easy, reliable way to use the dollar. And that might just be the smartest way to maintain US financial dominance in the years to come. The US wants to welcome stablecoins, put clear regulations around them, and keep them anchored within the American financial system, then let the market take it from there. That's the core message in the section being discussed. Kevin O'Leary also weighs in, highlighting something important. He's all for innovation. He calls out how the big traditional banks have spent years bashing the crypto space without doing much themselves. But this isn't just about Bitcoin, it's about the broader vision for digital payments. That's where the real game-changing opportunity lies. Why does this matter so much? Because once stablecoins are regulated and part of the mainstream, it opens the door for even bigger developments. One of those is the Market Infrastructure Act. And the second that moves forward, it'll force a decision on something we've been waiting for: is Bitcoin a security or a commodity? Once that gets settled, it could trigger a massive shift. We're talking about institutional investors finally feeling